Hi, guys. Welcome to the How I Raised It podcast, the show where you get an inside, unfiltered look at how real entrepreneurs raise capital for their businesses. I'm your host, Nathan Beckert, and today's episode is with Richard White of Fathom, an app that plugs into Zoom and helps you recall and share important moments from your meetings. We talk about the pros and cons of strategic investors, in his case, Zoom invested in Fathom, why he also raised his funds over multiple smaller rounds with no lead investor, tips for getting into Y Combinator, and much more. If you're tuning into this podcast to learn how to raise capital for your business, I've created a super valuable free welcome package for you. It includes a list of 2,500 investors who don't require a warm intro, plus 200 questions that investors are going to ask you. So this is really going to help you get ready to raise money. To get instant access to this, click the link in the first comment. While you're there, please leave us a nice comment, either what you like about this episode or this series in general. We really appreciate that. And last but not least, if you enjoy this conversation and think someone else would too, please share it with them and hit that subscribe button to get all our latest episodes. Thank you. Now sit back and enjoy this chat with Richard.
Welcome to How I Raised It, the podcast that goes behind the scenes with entrepreneurs who've raised capital. We uncover the tips, tricks, and techniques they use to get investors to write a check. Strap in and turn it up.
Hi, welcome to another episode of How I Raised It, produced by foundersuite.com. Today I have Richard White of Fathom Video coming to us from, are you in San Francisco? Where are you at these days?
Back in San Francisco.
Good. Richard and I met like a decade ago. You were pretty early in your previous startup, UserVoice. Maybe let's just touch on that for a minute. What was UserVoice, and I guess what was the culmination of UserVoice?
Sure. Yeah. So I feel like every startup I've done is solving a problem I had at the last startup. Is kind of what happens. And so before UserVoice, I was working on a company called Kiko in the first batch of Y Combinator with Justin Kahn and Emmett Shear, who went on to do Twitch. And we had an online calendaring solution, and we really struggled to we had a couple thousand users. We really struggled to get feedback. And I guess we didn't struggle to get feedback. We struggled to understand the volume of feedback we were getting. And so UserVoice was a platform that would help people that are running SaaS businesses or consumer products that were getting tons of inbound feedback to really make sense of it, kind of crowdsource the aggregation and basically collation of that. So you could just rock up and be like, oh, okay, here's my top 10 list of things that people want me to fix.
Yeah, that's cool. And we won't spend too much time on this, but how you've raised money for UserVoice, correct? How much did you end up raising for UserVoice? Was it VC or angel?
In total, we raised about $9 million. Almost all, initially kind of early stage funds and VCs. And then at the end, oddly enough, high net worth individuals.
Oh, interesting. What was the decision tree there for high net worth?
We were actually starting to do kind of late actually doing our tenure, probably 5 years in. We were starting to do a fundraise, a more traditional VC fundraise, and we got kind of preempted by some well-connected high net worth folks who were like, we really like what you're doing. We'd like to just invest ourselves. And so we were like, okay. So that was, it kind of, I'm not sure how reproducible that is, but it was kind of a unique circumstance.
Interesting. And all right, last question. What I remember UserVoice. I was a big fan. I thought it was such a cool concept, and it is a cool concept. What was there an exit, or you've obviously gone on to do something else. So what was?
So still privately held company. There's another executive team in charge of that. I built out a really good exec team, and at some point realized I was ready to start something new. I'd been doing it for 12 years, and so kind of handed the reins over to who was then the VP of engineering, now is the CEO of UserVoice, Matt Young.
All right, I had to ask this question because that's actually kind of an interesting topic. Is that difficult to do? To kind of if you're kind of long into a startup and maybe you've got a new idea, transitioning out, and did you have to message that much to the investors, or were they pretty patient and pretty happy with how things were going?
It took me 12 years to do it. So clearly it does take, it's not easy to do. It was actually less like I have an idea and I want to go do it. And it was more that every year I kind of asked myself two questions. One, is this company uniquely positioned to teach me something? And two, am I uniquely positioned to lead this company? Right. Mm-hmm. And round about middle of 2019 is the first time I started saying no to those things. And then, kind of found a way to set it up so that, I could kind of step aside without completely stepping aside, kind of step back a little bit, allow someone else to kind of step forward without giving them the pressure of the CEO title, watch how they did it, kind of almost like a, almost like a trial, right? And it's like, it's good for them. They got to see, do I like doing this? I get to see, do I think they're good at this? I can help support them in the transition. And then, okay, this is going well. Great. Now I will fully step back and you can fully step forward, sort of thing. But yeah, I think after a certain period of time, also it's healthy to have a fresh perspective injected, right? Like, at a certain point, you might have tried all the things you can think to try. And I also think I had some experience that reminded me how much I really like the 0 to 1 phase with a small team and just building out new products. And that really kind of fills up my soul cup. And so as much as I enjoyed how much I learned over the last, probably the last 8 years, where it was like still building product, but also like building team and learning about marketing and sales, learning all those other disciplines, I want to get back to like pushing pixels at a very early stage.
That's funny. I was actually on a podcast yesterday and talking about some of the early days of Founder Suite. And like, I honestly don't know if I have another startup in me from 0 to 1, because those first 2 years or 3 years were so hard. I think I aged rapidly in those 3 years, more than 2 decades. And now things are at a nice steady state and we're profitable and growing nicely. And like, I love it because it's easy now, but it was so hard. So it's interesting that you want to go back to those sort of formative, but I guess the challenge is fun there. The creativity is there, right?
Right. So, yeah. I mean, there were times, UserVoice was a profitable company and it was a pretty nice gig, right? It's like you kind of built a pretty good job, but I've really enjoyed kind of the second act with Fathom. In some ways I always explain it as like playing an old video game again. Right. And, this time you can kind of speed run it because, it's like, I don't know if it's like, I think like Minecraft, right? When I played Minecraft the first time, I spent like an hour walking around not knowing what to do. I know you had to like punch a tree to get wood out of it, right? And that's a lot like startups, right? I don't know, like first time around, you're like, I don't know how to play this game. I don't even know what the game is, right?
Yeah,
or like,
right.
I don't like. It's not like it's a linear. It's not like a Call of Duty game. It's just kind of open world game. You're like, I don't know. I could do anything. Should I dig this hole? Should I punch this tree? And this time around, it feels like, I'm dropping in the game. Like within 3 hours, I've already built out a whole castle, right? Because I just know like what the levers are and how to play it. And it's pretty fun, honestly.
That's cool. Good stuff. All right, let's segue into that. So what is Fathom?
So Fathom is basically our goal really is to make it so you don't have to take notes while you talk to someone on like Zoom calls and video calls.
You mean like this? Like,
yeah, like you're doing right now.
Like this?
Exactly. Yeah. And again, it kind of came out of my experience at UserVoice, where I was doing a lot of customer research and doing hundreds of Zoom calls with customers and like talking to people at like 20 minutes, trying to understand like where their pain points were, hurriedly typing up notes, like trying to clean them up after the call, and then spending a lot of time to write all these notes. And then 2 weeks later, being like, I don't really remember exactly what I said here. And more importantly, when I share this with my team, they would kind of look at my notes and kind of shrug, right? And be like, oh, okay. And something was very much lost in translation between like the really impactful, like first person conversations I was having and these like 3 bullet points that ended up like in a Google Doc or in our CRM. And so Fathom is a free app for Zoom exclusively, where, if you're on a Zoom call, Fathom will join your meeting. It'll record the meeting. It'll transcribe the meeting. But most importantly, instead of you taking notes, you can just click a button whenever you hear something important, and we'll automatically like highlight that part of the call. And from that, we can like auto generate a call summary. We can shove it in your CRM. We can send important clips to your Slack. You don't have to take notes because you can just go back and rewatch the call if you have a follow up with them in a couple of weeks. So it's been a really fun. It's a pretty technical product. It's a freemium model. It's kind of like all my favorite things wrapped into one.
That's fun. And when did you guys launch?
So we started fall of 2020. Then we started September, but we didn't launch till really like August 1 of 2021.
Yeah.
So
it
it
sounds
took
like
about
a
a year to incubate.
Is the target really salespeople, or I guess just anyone doing Zoom calls? I mean, I guess it's a pretty broad market, but do you have a niche focus for your beachhead or what?
It's really anyone doing Zoom calls, and specifically anyone doing like externally facing Zoom calls, right, with customers and clients. So we see obviously a lot of salespeople, a lot of customer success, but also just like a lot of consultants, agencies, coaches, that sort of thing. So anyone who's just on a ton of Zoom calls.
I'm trying to think, is there, a lot of venture raising and pitches are done doing
we have a bunch of investors too, right? Because investors are kind of like salespeople, and they're like, except for the salesperson gives the same pitch 8 times a day. the VC hears 8 pitches a day and they all kind of bleed together. And they're like, wait, what did this company say? And, they have the same challenge. It's like, oh, this founder said something really smart about, their go-to-market. Now I've got to write notes and share with the rest of my partnership what they said and convince them. Right. And so it's like, oh, like rather than watching this no one wants to watch like the entire call. Like, I watch this 30-minute call with Richard, watch this like 2-minute clip about how we talk to go-to-market about Fathom. Right. Like it's just so much more efficient and effective.
I totally see that. That makes sense because I get the use case on the venture partners side. That way you can share the meeting with his other partners and things like that. Is there a use case on the founder side pitching VCs to kind of transcribe it and summarize the call? I'm just trying to think if there's a way to,
I mean, I think on the founder side, on the fundraising side, it's like, sometimes you're in these meetings and like, you're in pitch mode, right? And like, sometimes you get happy years and like be able to go back and rewatch. You're like, okay, especially at the last couple minutes, that call, like, how did we actually close that call? What did they actually say was going to be the next step? And like, let me now rewatch this and pay attention to like their facial tics and stuff like that. Do I think they're like, where do I think they're actually at? Right. Because sometimes we're so in the motion of like presenting mode that we're not reading the tea leaves, which is why you always hear this phrase, happy ears, that salespeople get. Right. And the founders were salespeople. And so we tend to get happy ears. So that's one benefit of it. And the other benefit is just like, great, I don't have to think about next steps. I can just go back and rewatch the meeting before the next one. And like, if I feel like generally when I get on calls, I just go rewatch bits and pieces of the previous call, and then it all comes rushing back. And it's almost like that call didn't end. We're just picking up right where it left off. And so I think that ability to have a really like strong continuity of conversation, I think is super helpful to a founder.
And like, let's just take that use case for one more second here. Go back, watch what the next steps were, and then you mentioned like you can transcribe that and then feed that to CRM, so that next step could actually get populated into a CRM.
Yeah, exactly. So, and we see this a lot, I think, for salespeople and success, right? Where it's like, at the end of the day, it's not enough to just take notes. I've got to get it in my CRM. And so like automatically find the right people, right, in your CRM, will automatically like put in the call summary, log the meeting. And if I flag any action items, create tasks and handle all that. So we're kind of like a routing station for everything that comes out of your meeting.
Interesting. It sounds like Founder Suite needs to build a integration or API with Fathom at some point.
There you go. Yeah, let's do it.
Cool. Great. Well, let's talk about raising money for this. How much have you guys raised and how many rounds?
We've raised 5.5 so far. It's interesting rounds. In some ways, maybe we've done 5 rounds, right? Mm-hmm. We basically have been raising money every 3 to 6 months since we started. And I think there's this is kind of like a second time founder optimization, right? Where instead of like for UserVoice, we went in our, we did, I think 2 seed rounds, basically we did like a pre-seed and a seed by modern standards. And both times were led by an early stage VC, Baseline Ventures. And they did 80% of the round, right? And they set the terms and, like they took the bulk of the equity ownership, right? This time around, we did the inverse of that, which is more of the like, I think historically it was called like the party round, right? Where we went and said, okay, we're raising this much. We start with kind of friends, friends and network or friends and family sort of thing. But then in every round, we didn't really have a lead, or our lead was not 80% of the round. They were at most like 28% of the round, and the rounds were smaller, right? And so we were raising, $500K to $1.5 million at a time every 3 to 6 months as we hit a new milestone, all on safe notes and kind of ratcheting up the valuation as we went, right? And so in some ways, that's like if you have high conviction and, you've got a good network and stuff like that, it's a kind of an optimization of, okay, I'm not going to raise for 3 years of runway or whatever. I'm just going to, and lose X% of the company, 20% of the company. I'm going to give up 5% at a time, right? And the other upside of that is we also had this theory, or I had this theory going in, that I really wanted a diverse group of investors and perspectives. And I kind of think that what I found is that sometimes someone putting in a 10K check is just as valuable or even more valuable than someone writing a $1 million check out of like some sort of like seed fund on the side of a Series A firm, right? And so I, from the get-go, have thought about with Fathom, I want to build like a big tent of supporters and advocates that have big reach. And I think we've shown that that's been like super, super helpful. So across that 5.5, I think we've got like 90 something investors. The average check size is like 70K or something, right? But that's really the average check size is like 10 to 25. And then you got a few folks coming in at like 100 to 200.
That's interesting. That's an interesting strategy. I haven't heard that too much on this show. We've had people that have done like party rounds, but not quite as specifically as what you've done. I mean, you're almost getting into crowdfunding territory here. Like, would you ever just throw up a crowdfunding campaign and even have 900 supporters instead of 90?
Oh, I'm like 1,000% excited about doing that because we're actually doing things where we're giving some of its equity out to users. Like our biggest power users, we actually have a program where you can earn equity in Fathom itself, and we do it through advisory agreements. And so I'm a huge fan, and like we're a word of mouth product, and I feel like this is a word of mouth era. I would love to have thousands of small investors because again, it's like the person who writes 3 checks a year, doesn't matter what the price, out of their own piggy bank, is going to care much more about your outcome and be much more, telling all their friends about it than some big VC writing out of, this is 1 of 10 checks they're going to write this quarter sort of thing.
Interesting. Not to get off on a tangent, but like that equity for power users, what's the structure on that? You're a power user, you're telling X number of friends, and then you get like a basis point or 2 or something.
It's actually way less than that, right? But it's like we basically just, every company generally has advisors, right? But usually they have like, a handful of like domain experts. And we just said, all of our users are, especially our best users, are kind of domain experts in our product. They're giving us great feedback. They're telling their friends, they're getting their colleagues to use it. And so we just structured it as advisory agreements. So instead of having 3 advisors, we have a couple hundred advisors.
Can you share like what kind of equity if someone wanted to kind of replicate this for their own word of mouth product? Like,
yeah, it's I think generally so you can look at company Cabal has been kind of like systematizing this, and I think folks at Sendoso were the first company I heard of doing this. And generally they're talking about like you are overall allocating like 0.5% to like 1% to being given away to users, right? That's probably the range. And then you can kind of figure out like how many users you want to give away to and kind of do the math there. So it's kind of about the same amount of equity you would give out to an advisory panel, right? Like if you went and got, 3 heavy hitters sort of thing, right? An advisor, but instead you're just going to reallocate it to users.
You're carving up 1% amongst 20 people, 50 people? Something?
No, like a couple hundred.
Oh, okay. And that's enough to get them. I mean, I guess they're a fan of the product, so maybe that's their true motivation, but is that fraction of 1% enough to get them motivated?
See, this is the thing. Like most people don't think about it in that way.
Yeah.
No one, like most employees, large number of employees I've talked to never even think to ask the ownership percentage. And I always tell people, like, unless you're trying to take over this company, you shouldn't really care what the ownership percentage is, unless you're just trying to benchmark it against market, right? What you care about is share price and like strike price and that sort of thing. And I think, what we found is for, folks we're talking to, the nominal value of this probably is like a couple $100 to start. But if we went public in the future, it might be tens of thousands of dollars, right? It's not going to be millions of dollars, but it would be enough. It's enough. And it's way better than putting them on like a Amazon gift card treadmill, right? Where you're like constantly giving people, oh, here's $20, just 20. I'd rather, so it's like symbolic, but partially there is real upside, but it's not upside that I think it's almost more like a public market, GameStop crypto type like speculation as opposed to a early employee type mindset or advisor mindset.
Yeah, totally get it. All right. I'm going to ask you a kind of a specific question about that round structure, and you can skip this if you want, but again, for kind of a playbook for anyone trying to follow us, 5.5 million over 5 rounds, safe notes, valuation step ups at each time. Can you give, well, if you're willing to share like what your valuation step up at each one would be, just so people can kind of see what that would look like? And
yeah, I mean, I think, it ranged from 8 all the way up to 40, right? So over the course of, 18 months. And again, sometimes, generally it was always at some sort of inflection points. It'd be like, okay, we're starting the company. And then it's like, okay, we got accepted to Y Combinator. Okay, now we're exiting Y Combinator, but we've been accepted as a launch partner for the Zoom app store. And then it's like, oh, we've launched. Oh, and then it's like we've hit these like growth metrics, right? So almost at everything, we we generally had like some inbound interest always, because we were doing things and like, people noticed this stuff. And then we kind of said, oh, we got enough inbound interest and we've hit this milestone. This seems like a natural time to go, like, let's go raise, a small chunk of change sort of thing.
Makes sense. You went through Y Combinator. Now you're a seasoned, entrepreneur. So I guess why would you
probably more grizzled?
Grizzled. You don't look
weathered.
Weathered. But I guess I can probably guess the answer. But like, why go to YC when you've already been through the startup loop, multiple times? Yeah.
I mean, I think I tend to think that just on the market they create for your shares through the demo day process, that almost pays back most of like the dilution you get from going through it alone, because they do such a fantastic job of that, right? Like, it's really tough, I think, as a founder to create urgency and timing and all that stuff. And there's, they've kind of mastered that. Also, as a grizzled, weathered, seasoned entrepreneur, one of the challenges is that like, I know how to play the game a little bit, but the game also constantly changes. And so, I think being in the arena with a bunch of other folks that are also in the arena and being able to compare notes, being like, okay, what tools are people using? What market tactics are people finding working and not working, right? And just kind of like, I think we were very successful in Product Hunt, and I would not have been that successful in Product Hunt if I couldn't pick the brain of a few other founders who had recently gone through it. And, so there's kind of that. I was actually rewatching Gladiator the other day, and Max was in the arena, and like he survives at one point because he gets all the other gladiators to like work with him, right? And so I kind of feel like it's that, right? Like we are gladiators and we're working together against the legions of Scipio, and so that's one part of it. And then the other part is just like, I don't know, I'm kind of competitive. In fact, I took like the Strengths Finders test. It's like my number one trait. It's like very competitive, and so most of my colleagues, like it was my peers that I first started with 10, 15 years ago, are now like VCs or they're running public companies or whatnot. And I also wanted some like friendly competition with peers, right? So it's like we can learn from each other, but it's, it's nothing like shared accountability of like we meet every week and we all have to say what our milestones are. And these are, the best entrepreneurs in the world, or most of them, right? Like these are the top quartile, top 10%, whatever it is. And so there's like, it's something about also just being pushed to compete with everyone that I think just makes you a little bit better.
Yeah, no, those are good. I like it. And you did which cohort were you?
We were winter 21. So we were the second fully remote batch.
Got it. Very cool. Just this has been covered a lot in different podcasts, but any quick tips for getting in? You already had kind of a pretty good track record, but like any tips for getting into YC? Anything changing, right? Games is changing. Like what are they looking for these days?
I think they do a decent job of like publishing. If you read through their stuff of like, here's the types of things we want to fund. I think more than anything, it's like, I think sometimes founders focus so much on like, I know my product inside and out. And what they really care about is like, you understand your problem domain inside and out. Because the product's going to shift and change, but they really want to understand like, you have a good grasp of like the market and the problem you're solving. And you spend a lot of time thinking about it and like researching it and talking to the people that have that problem, not I had this problem myself and now I built a solution. Let me talk to you about the solution I built, right? Like the solution is, the problem is generally pretty solid, pretty immutable. Your solution is going to change a lot and flex a lot, right? So just understanding your problem space, I think, is probably the most important thing.
Yeah, actually, I like that advice a lot. Okay, a couple other questions. I believe Zoom Launch Fund, which is, I guess, their venture fund, invested in you guys.
Yep.
Maybe talk about the thought process there. And, I guess it's kind of also a question of like pros and cons of taking strategic capital. I consider Zoom a strategic investor, right? So what do you think?
Yeah, I mean, I think, I think we were 2 months in to Fathom, and Zoom announced there's like new kind of plugin architecture they're calling Zoom apps, and this like new marketplace experience. And it was kind of like one of these like, oh shit moments where we're like, oh shit, like that's exactly what we need. Because we were trying to figure out how to like integrate with Zoom. And we're like, oh, if only they had a plugin architecture. And then they kind of announced one. It was like, oh my gosh, that's the thing we need. Oh my gosh, we're not involved with this platform at all. Like we have to, like, this is almost existential. We have to get involved in this. And so part of our like quote unquote second round of funding was very focused on finding people that had strategic connections to Zoom, like early investors of Zoom and whatnot, to just find people that help us build relationships at Zoom. And so, that and some well-placed cold emails led us to get into that program, building relationships Zoom. And so it's almost like, I would say the funding kind of came after, like we almost built all the relationships with Zoom, and then they were building this fund and we were raising at the time. And so it was kind of like it was almost more of a kind of like consecrating the relationship sort of thing. Like it wasn't like we just cold emailed them, and like, it wasn't like getting into that fund Kickstarter into the programs. Like we were already pretty embedded in Zoom. It's like, well, let's get married too. Right. Like, so, and, I think it's like with partners like that are as important to you as Zoom is to us. You want to do all the things, right? You want to build all the relationships. You want to be as tight as possible. And they were great to work with on the funding side and super supportive. And so win-win.
I guess, what are the possible risks there? Does it preclude you from selling to WebEx or Cisco, or I don't even know who the other video sharing are these days, but
I mean, they were pretty flexible, and we basically they're a safe note like everyone else. So it's not like they have board control or anything like that, right? It's a small strategic investment. They get some visibility into our business, and we get some visibility into what they're doing, right? So it's pretty lightweight as like strategic investments go.
Okay. Cool. Let's talk one or two more questions. I'll let you get back to work, but 90 or so investors are across those safe notes. How did you wrangle so many folks? And did you ever have a process, or was it just kind of talking to your network, which I'm sure is pretty large these days?
Yeah, I'd say like, the first round was like 500K, and that was mostly just like folks in network. And that was me just like posting on Facebook, literally being like, hey, working on something new. Or I mentioned something to some of my folks, and, it's like friends like, oh, I heard you're working on something new. Right. Like, and at this point in my career, I'm fortunate enough that most of my friends have had like successful exits themselves and are now angel investors. And then I think the second round was, more like second order connections, where it was like, oh, friend of mine had investor, like one of their early investors was this company, right? Like I think Maven Ventures was kind of our lead for that round. And like, they were early investor in Cruise, and I'm good friends with the founders of Cruise, Dan and Kyle. And so they're like, oh, you should talk to me. So like that round was kind of second order connections. The third round was on the back of demo day. And it was literally just, we got hundreds of leads for investors at demo day. And we kind of like curated that down to folks we thought would be the best fit, and did that. And then the later rounds were actually people then coming to us and being like, oh, we had, I think what would that be? The fourth round was the fourth and fifth rounds were basically like people that saw us in the wild, and often were actually users of our product. And they're like, we've used a lot of products like this. This one is way better than the other ones we've tried. Are you raising money? And it kind of like that started the process. Right. So yeah, that's kind of how that went. And almost every one of these times, there would also be you do the classic, like, when someone offers to invest, especially if they're an angel, it'd be like, is there anyone else? Are there any other investors you're friends with that you think very highly of that would be a good addition to our team? Oh yeah, you should talk to A, B, and C. Great. Right. And so nothing better than an intro from someone's in network contacts who just invested in you. And so that stuff tends to roll downhill pretty quickly.
Yeah, that's good. With UserVoice, you mentioned I think you said the last round was kind of a high net worth angel round. And so far it sounds like you've gone mostly down that path too. Like, how do I put this? Are you avoiding VCs? Do you want to raise a venture round, or do you, have a different playbook? Yeah.
I mean, I do think, we're thinking about, the steps to Series A. And I think that like, at that point, it does make sense to go find a firm that really gets what we're doing and can be super supportive. And I think for a lot of folks, getting a VC, quote unquote, at the seed stage would make a lot of sense, right? You would, if this is your first time playing startup Minecraft, right? I think it like benefited me to have someone who was really invested, right? With UserVoice and Steve Anderson, someone who was really invested in understanding the game was being played and kind of could point me in the right direction. I didn't feel like I needed that as much as I needed to be able to say, yeah, I need a larger network so that when I knew how to play the game, I just needed the maximum number of resources, connections, insights, et cetera. And so kind of optimize for that. But at the next phase, and as we get larger, I would think that we'll probably work with, a VC firm that can, use, especially once we started like getting beyond where I got to with UserVoice. Right. And so then I'll be back playing a new game, because almost at every step of the startup journey, like it's not really like you basically get pulled out of Minecraft and now you're dropped into some different game, right? And I haven't played the subsequent games, so that's probably where I will focus more on finding a VC to partner up with.
We are seeing some startups. I've even had some on the show. We haven't released it yet, but we have one called Miso Robotics. It's raised lots of money and avoided the venture world altogether. I'd say it's pretty rare, but we are seeing a little bit of that. It's kind of interesting.
Yeah, I think it's good to have options, right? Like I think, for a while you really only had one path, right? And now you've got many more angels, high net worth folks, family offices, early stage funds, late stage funds, middle funds, and crowdfunding, I think too, right? Like again, I think that's a really interesting angle.
Okay, last question. What advice would you give your younger self if you were doing this all over again? Or what advice do you like to share with, earlier founders that we haven't covered here? Anything?
How many hours do we have for this answer? Yeah, I mean, I think the thing the thing that served me well in my career, or like if I look back at like all the inflection points in my career, they were always when I kind of like checked my ego and found like joined up with someone, right? Or found a way to get people to fold people in with me, right? Like, there was a cold email to Justin Emmett that led to me joining their company. It was a cold email to the head of the Zoom Apps program that got us in the Zoom Apps program. And so I think a lot of this is just, take what's offered, right? Figure out like whatever's put in front of you, figure out how to like maximize that. I think in the past, sometimes I was like, no, I want to do it this specific way. And again, going back to playing a game, like, if you're playing Settlers of Catan, you got to be flexible based on what other people are doing and what resources fall your way. And you can't just go in there with like, oh, I'm going to do it this way, right? You got to just kind of play to whatever cards you get dealt. But, whenever possible, find people to join up with, find people to fold into your rocket ship or join someone else's, because that's, I think, sometimes the hardest thing to do, right? I think I personally, for a long time, struggled with being, the lone wolf in the woods, and you really can't get as much done that way. So
did you launch with a co-founder, or are you?
I didn't, but I launched with a team. So I had this time around, that was, I think, probably the biggest superpower of V2 here is that, with UserVoice, I had to beg, borrow, and steal to find good engineers. And this time around, I had a network and already, had a bunch of ones that I'd worked with for years and that we could kind of call on and work with. So, so not technically, I think, a co-founder situation, but like certainly had a good team around us. And I think that's been super important to going fast from day one.
Good stuff. All right. I will let you off the hook here. If people want to learn more, it's Fathom.video, right? And they can sign up directly there, or what?
Yep, that's right. Yeah, if you go to Fathom.video/pod, you'll skip the wait list. Sometimes we end up waitlisting people when we get too much inbound. So just follow that link. You won't get waitlisted. And if you have any feedback for me, I'm on LinkedIn. You can find me there. I'm not a Twitter guy. I'm a LinkedIn guy. Message me there. Happy to chat.
Cool. Awesome, Richard. Thanks. Good to see you again.
Fun good to see you as well. Thanks for having me.
You're still playing the startup game, and it sounds like you're having fun with it. So good on you.
Still having fun.
Okay. Over now. Thank you, sir.